Good afternoon, everyone, and welcome to the Daily Volatility Box Report for October 17th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we had just one trade that set up, and this was in the 30-year bond futures. We'll talk about this trade in tonight's video along with some upcoming earnings plays, but this trade was a winner for us. We were saved by a tick. This time the beneficiaries of having a wider stop. And our P&L with our two contracts was $437.50. Again, nothing too crazy. We're still negative for the week, but nice to have a winning day and this time be spared by a tick instead of what usually happens, which is we get taken out. For tomorrow on the calendar, we don't really have too much. So we're going to follow our typical plan of letting the aggressive volatility box dictate to us which volatility box we should be using. And that's the plan we'll follow using that first hour test. Unless, of course, any news events come out. Also, just be wary of the fact that it is Fridays. And a couple of the past Fridays have actually kicked our butts in the recent history. And so just keep that in the back of your heads. But let's use the hour test and see what happens. But as far as scheduled events go, nothing on there. But I will have the news panel up and ready just in case we have any kind of serious price movement one way or the other. All right, we've also updated the Smarter Earnings Indicator with tonight's video. So one thing that we've added, which was a suggestion from a user, George, which is the ability to see expected moves. And for the earnings plays that we'll take a look at tonight, we have three tickers, 4 plays total. So we have a play in KSU where we're looking for a gap and go on the bullish side, if and only if we have an earnings beat. And instead of using standard deviations like we've been doing, we instead captured the lowest move that we had gotten in the bullish gap and go, and then the average move. And so this lets you start to figure out targets a little bit smarter. We've been seeing that the V-score hasn't really been helping too much, especially if we just gap up even before the open above or below one of our standard deviations. Then the next standard deviation is just too far of a value away. And so instead, I think this might help us better capture the types of moves that we're looking for and also help us better define our risk. The next ticker is STT, and in this we have 2 plays, either a gap fill or a gap and go. On the gap and fill side, it doesn't matter either a bullish or a bearish gap fill, but it needs to happen with the logical earnings beat or miss. So for example, if we have a gap up, then the earnings must have been a miss for us to then play a gap fill. And then vice versa, for a gap down, we would want earnings to have been a beat to then play the gap fill in the bullish scenario. So that's one play in which we don't really look at dollar moves since we have the gap. And again, the gap, all we define as the gap is if we open above or below yesterday's high or low, the day before earnings high and low. And so just keep that in mind. So just because we say might gap up a penny or two above, that's not necessarily a trade that you might be looking at because that doesn't really make a whole lot of sense from a risk to reward perspective. The second trade on STT is a gap and go, and this is we're looking in the bearish scenario, and this is off of an earnings miss. And if that happens, then the lowest dollar move has been $1.26, and then the average move has been $2.69. And then finally, the last ticker is SLB, in which we're looking for a gap fill, again on both directions, using the same logic that we talked about up here, and no direction here, but it all depends on how much higher or lower we gap in comparison to the highs and lows. But these are the 4 plays that are setting up for tomorrow based off of what looks interesting off using the Smarter Earnings Indicator. Okay, and now for the Volatility Box entry. We start by drawing our Volatility Box timeline, and we check to see whether or not we've reached either side's aggressive Volatility Box entry lines. We very clearly had it, which was our sign to continue to use the aggressive Volatility Box. Our entry came as we had an opportunity to get short right here. Our stop was 7 ticks outside of the Volatility Box, and we got to 6. And so this was the one time that we were actually saved. A lot of times we've gotten stopped out for a tick, but at some point you need to define your stop somewhere. And for us this time, our 7 tick stop was spared, and we saw a move in the opposite direction. One interesting thing, and we've talked about this now in several videos, is once again that T2 line had bumped up to where both our where both our contracts now were at our original first target since our T2 was less than even that original 7 ticks. And so we've also noticed that anytime this happens, this is a very clear sign to just switch on over to the conservative volatility box. If we head on into the clouds like this, we know that price is not really being contained inside of the aggressive models, since typically what we should see is a reversal from the cyan entry lines. And so that then becomes our sign to switch on over to the conservative volatility box for the rest of the day. Now, luckily, we did get that follow through we were looking for, but right here, I was ready for this trade to be a stop out until we had this nice reversal. And if we're trying to look at this just in terms of maybe any signs that we might have faced more volatility today than usual, we see in the overnight activity where we had this massive puke down. And then if we had switched on over to the conservative volatility box, I'm pretty sure that same puke existed as well. Yep. And so this could have been your one sign that perhaps price is not being contained. But what we saw from this is really just a sharp reversal. It wasn't the beginning of a bearish trend or anything of that sort. And that's why our bubbles didn't go on, since it didn't fit our timelines. But really, this is just the only one potential heads up sign that might have existed, just in case we're taking notes and making observations. Okay, and to finally conclude this video, we'll talk about just the changes that we've made in the Smarter Earnings tool, and the newest indicator is published on our website and available for download. And just as a note, anytime we make changes to the indicator, we go ahead and upload that version as well. So if you see something on our charts that's different than the version you have, just head on over to our site and you can download the latest version, and it should line up with what's in these videos. Anyway, so one change that we added is we added in this label right here, the lime green label, in which we compare the actual move to the expected move. A note here, we calculate this expected move in a manual manner, and if you look in the code, you'll see the calculation that we use. We use a rough calculation of 2 days for the square root. So the square root of 2 divided by the square root of 365, and then we multiply this with the implied volatility times 2. And then we also take the close price. You can look at the full formula, but really just keep in mind this is a rough calculation, and all this is meant to do is if you say had a list or a scan with all the upcoming earnings open on the side, you might be able to quickly go down and just see through labels what say might be beating the expected moves more than X percentage of the time. Right, and that's what this label is there for. Again, if you don't care for this, you can turn these off. We've added in the function to turn this off. Another thing that we've changed or added is we also added in the lowest move here. And so these are the latter two labels where we have our lowest bullish and bearish move in addition to the already existing labels of the average moves. Okay, so those are the changes that we've made. Also, you'll see that there's a green chart bubble for all the times that we did beat or have a greater than expected move after earnings. And then in the case of something which has earnings coming up, the green bubble will also populate to let you know what the indicator is calculating to be the expected move that then powers this calculation right here, just in case you wanted to use calculations that all line up. And you'll notice that this number is a little bit different than even the options chain. It's close enough, but it's different. And so keep that in mind again. Just pointing this out, it is a rough calculation. All right, so for today, we had just that one trade in the bond futures, which was a winner, and that gave us a total of $437.50 across our two contracts, and that was it. All right, if you'd like to download the latest version of that Smarter Earnings Indicator, head on over to our website. It's available there. And if you'd like that earnings table that we showed earlier in the video, that's also available in the blog post on the website. Thanks for listening, and we'll see you in tomorrow's nightly update.